Today is 24th of July 2015, Friday, the last day of the week. Sorry. Today there were two important movements, one with Aussie and another one with Canadian dollar, also known as loonie. Aussie got hit because of the weak Chinese PMI. It came out at 48.2, below the forecasted of 49.8. and below the previous month. So with this number, if it's less than 50, that means the country's manufacturing industry is doing not very good. So it has to be more than 50 plus. For example, with France, for example, so a country's PMI is more than 50 plus, then it's considered good. So there was some news of Aussie getting hit today. For example, there was a news in The Guardian of how Australian dollar hits fresh 6-year low as Chinese factories continue to falter. So they are referring to the PMI number that came out today. And because the Aussie got hit, Aussie dollar fell down, Euro Aussie went up, and Pound Canadian went up too. So if we look at the charts, so if you see here, Aussie dollar fell down today. So because of this, Euro Aussie went up. And same thing with Pound Aussie as well. The other important movement was with regards to the Canadian dollar, also known as loonie. It weakened today. This could only be explained because of the falling oil price. So if you look at the oil price, it has broken below the 50 for crude and it's falling down. Now it's trading at 48. And because Canadian economy is very much dependent on oil, fall in the price of oil would affect its currency strength as well. So Brent, crude, they are both falling down. There was some news regarding it. Just before that, let's see if there was anything about Canadian today. No, in Financial Times, there's a general news of how commodity currencies are at multi-year lows. Canadian, Aussie, Kiwi. And another news of how July gets uglier for loonie as it hits 11-year low. So $1 would give $1 would give 1.30, more than 1.30 Canadian dollar. So going back to 2004, so it's at those level. And hence, if you look in the chart now, dollar Canadian still moved up today. And there was some up movement on Euro Canadian and Pound Canadian, though not in the same degree as Aussie weakened today. There was some other interesting news around the coming rate raise between the Bank of England and Fed. For example, Fed and BOE roar ahead of rate raise rivals. So as we discussed yesterday, Fed may raise the rate in autumn September or in winter December, and BOE may follow it up in February. And another related news of interest rates, central bankers' dilemma on both sides of the Atlantic. So they are referring to UK and United States. Dilemma because of another interesting news may explain this. Central banks caught between commodities slump and Fed hike. So this is the dilemma it's referring to. The prices of commodities are getting hammered. So in this scenario, if the central banks raise the rates, the prices of commodities will even get hampered, which in turn will affect the countries those are dependent on the commodities. And there was another news of gold falling down. It seems to have reached a low of 5 years. So if you look in the chart for gold, it has fallen down below 1100. But today it seems to be bouncing up a bit. It's going down. So in the last 5 years, if we go back to 2010, yeah, it's around that mark. There was news from Morgan Stanley saying that the price of gold could plunge to $800. And I remember watching another interview, I think on CNBC or Bloomberg, saying that the price of gold, $1,000 is the psychological mark. It may test up to here at least. And there was one more interesting news I saw. So the headline was, "This dollar chart is bad news for emerging markets." But for us, what's interesting is if you look at this chart, whenever dollar rose in the last few decades, the emerging markets really suffered. For example, during the Asian financial crisis in the late 90s, mid-90s to mid-90s, late 90s, the dollar index went up from around 80 plus to more than 110 plus. Currently, it's at around 97 mark, and it has been rising up. And we have been seeing lots of news around how emerging market currencies are suffering in general because of the rising US dollar strength. Going back to late 1970s, beginning of 1980s, Latin American debt crisis, there was one interesting term, tequila crisis. It's referring to Mexico. So it looks like during that decade, late 1970s, beginning of 80s, there were many sovereign defaults around in the Latin America. So for us, in the coming years, so this trend could last for a few years. So you should be wary of this. There was something else that I want to say. Oh, right. So now one thing we're seeing is the Chinese economy is slumping. And even though China was the first to recover during the financial crisis in 2008-9, now it seems to be undergoing a slump. Now I've read someone saying, actually Jim Rogers, who founded the quantum funds with George Soros, that this 21st century is the Chinese century. So the last 20th century was the American century, and the previous 19th century was the British century, and before that French and Dutch, and going back to Spanish and Portuguese. Now, even though the Chinese economy looks really bad, in long term, if you look at a 100-year span, it seems like even in 19th, 20th century, it's only after the First World War ended with the victory of the United States, American power began to really grow, and it was able to stamp its weight in the international affair. So now is 2015. So this recession in China, or this problem economic crisis, may last for another few years. And maybe after 2020, China may really become a leading superpower, even surpassing United States. So let's wait and watch, I guess. And I think those are the important happenings from today. Other currencies or indices doesn't deserve much attention. Right, so that's it for today, and we'll come back on Monday.